Good morning everyone and welcome back to this new edition of the Daily Analysis. Let's start with a recap of yesterday. Yesterday, basically, we were waiting for the CPI data, as I mentioned in yesterday's edition of the Daily Analysis. I didn't expect, particularly strong movements on the data, so much so that it basically didn't produce anything except, a bit of a squeeze upwards and downwards, but basically then it remained where the price was, that is more or less in the 21,000 area. At the open, there was a strong upward surge as a result of everything we discussed yesterday morning, and this has now brought prices back to important resistance levels with projections that could certainly pave the way for further bullish pushes. Also, this is probably due in part to the boost given by Trump at the conference in Saudi Arabia, referring to Nvidia, Apple, and so on, essentially referencing production and the strategic assets that the United States intends to defend and certainly to prioritize over other situations. So pay close attention to these stocks, as they could definitely be subject to movement precisely because of this whole situation. Another aspect I wanted to bring to your attention is this. I've been reading for a while now, a lot of reports that are starting to worry market participants a little bit. Let me explain. The situation is actually very dangerous because of the deficit, because of the United States deficit. That is, to be more specific, the US deficit has, in essence, fundamentally and essentially increased by $200 billion. As a result, indeed, it has increased by $200 billion when compared to the fiscal year 2024. So, this is definitely a factor to take into account because, as you can read on the White House website as well, with the various reports, they just can't manage to contain the growth of this deficit, and this obviously leads to an increase in the yield required to hold U.S. government bonds. And in fact, I have prepared this. Well, let's say prepared, I mean I have selected this chart from investing.com. This is the chart of 30-year yields for US government bonds. This is the yield on the 30-year bond. Look at where we are. We are at absolute highs. In short, these were recorded in October, and right now we are approaching this dangerous threshold. In short, breaking through this threshold could trigger significant portfolio reallocations, because surely there will be movements. So it's a situation that absolutely needs to be monitored, and we need to understand how this situation might develop and how the Fed intends, in short, to contain the rise in these yields, which beyond certain limits obviously become unsustainable. Perfect. With that, after this overview, let's move on to today's operational details. This is the Nasdaq chart we'll start from. At the moment, we're roughly in, here it is, BC3. We're definitely operating above the BC3 levels. So, no, this probably isn't updated. Let me take a look. No, it hasn't updated. All right. Anyway, we'll redo it later. So definitely we need to monitor this area that is currently touching, which is RD0, because a break of this area will obviously bring prices smoothly into this 21.4 area and then possibly go for RD2 as well. On the downside, in short, we might also see a bit of movement. There aren't any significant macroeconomic data releases today except for crude oil inventories this afternoon, shortly after the US markets open. So it could be a day that just slips by, basically, following the trend we've seen in recent days, with volatility decreasing and overall definitely a positive trend. So for now, let's keep an eye on RD0 and SD0 during the opening phases. As a first step, On the upside, obviously I expect a test of RD1, and if RD1 is broken, it could easily push prices up to the VX area at the highs. On the downside, of course, we monitor as we mentioned, SD0, which seems to be related to this level, even though it's not a key point. While waiting for further developments, it's definitely a support to keep in mind. Obviously, the next one, well, the most important area is definitely this one, which then corresponds to the VIX area and to a minimum point. Let's also take a look at ES. Here it is. This is ES, and here too we're operating within the range between SD0 and RD0. So let's monitor this area on the upside. Obviously, this double top recorded yesterday at the close around the 59.25 area is definitely, well, the key level to break through. So once this high here is surpassed, we could easily reach the RD2 area, which is around 59.50. That would also complete the fifth wave of the analysis presented for SPX, maybe a few points higher probably, around 59.84 or 59.90 for to ES, if not higher. I still need to develop the analysis for ES. On the downside, we're monitoring this area here between SD1 and SD3. It's SD2 because this is the important area. So 5880, 5870, 5880 is definitely the area to watch for SPX on the downside. Holding this area could also then push the price upwards. A break, of course, could also bring prices into this area here around 5820, maybe to retest this area before yesterday's jump. Let's move on to the Dow Jones. Here it is. Yesterday it hit its head a little bit, meaning it didn't align. You see, it didn't break out. In short, it stayed anchored to the downside. At the moment, it's working on, well, an important support level, which is this whole area here between HV and RD0. This is the area to keep an eye on. So SD0 absolutely needs to be monitored with extensions down to 42,000. So with SD2, it's definitely the area to watch on the downside. On the upside, the breakout of this area here, RD1 could easily bring prices back to the highs reached on Monday. Let's also take a look at the Russell. Here it is, which is coming in as well, a bit more subdued compared to the S&P and Nasdaq, which yesterday, after all, delivered a strong performance. At the moment, the price is moving below HV. So let's say that as a range, we can identify this area between 2120, roughly 2120, sorry, and 2100 as the range. A break below 2100 along with this BC3 level area could easily bring prices back down to the 2090 area. Also testing SD2. On the upside, of course, we're watching the 2115 to 2120 area, whose breakout could easily bring prices back up to the highs around 2135, 2140. Let's look at oil, which yesterday continued its upward trend. It had pulled back quite a bit, but then it stopped right around the 6170, 6180 area before starting to rise again. Right now we're working in the 6240 to 6340 area between the RD0 and SD0 levels. It's true, there was a slight overshoot, but probably it's just testing these highs here and of course holding above them. So with the SD1 level, this could trigger moves even into the 65 area, definitely around 65.30 for sure. This is an area we could reach if there's a breakout with good volume, especially since today there's also the crude oil inventory report in the United States. Remember that tomorrow there's a contract rollover, so the volumes might already be a bit split today between the expiring contract and the new one. So on the downside, let's keep an eye on this area here. Now we still need to take a look at gold. Here it comes. Well, it's kind of moving sideways here on these lows. It made a false breakout attempt yesterday, or rather it actually did that on Monday before coming back in. So for now, we're already working on SD1. So let's monitor this area here. SD, SD1, SD, SD1. SD2 up is the area to watch. A break of this area could easily push prices further down, even towards the 3,150 level. On the upside, of course, we're going to monitor this BC3 level along with SD1, and it seems like a good level to me, because I think that most likely it will easily reach the 3,300 area. So maybe it could recover the week's opening and possibly even attempt to close this gap. SPX, of course, let's just take a quick look at it. Just a quick look. As we've already mentioned, we're moving toward the target for this fourth and fifth wave that we've drawn, which should be around the 5,957 area. We'll see if maybe today we'll touch it. But in any case, the move has started. The price has settled right on the upper part, as you can see, of this fourth wave. It made an attempt. We can consider this gap as a retracement, basically. So we could easily reach the indicated target area today. On the downside, of course, we're monitoring a return into this range here, which could then lead to a move back to a test of this area here, which has basically remained empty because of the gap left at the beginning of the week. We still need to take a look at Bitcoin. Here it is. Yesterday it managed to recover a bit, almost 105,000, but then it pulled back, and at the moment it's working, let's say, within a range that we can identify between SD1, between RD1 and SD1. So let's keep an eye on SD1, because a break below SD1 could easily bring prices back down to the SD2 area, where testing this level could become risky, since breaking through it might even lead prices to retest the 100,000 area from above. If this area here holds, obviously I expect a new attempt to break through this 105,000 area, whose breakout would clearly pave the way for new highs, which could even reach up here in the 1 max area, which is at 106,380. Perfect. With this, we've reached the end. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thank you all for your attention.